Hello traders and welcome to another video review. Today is Wednesday, July 8, 2026. Let's take a look at the economic calendar for today. So what do we have here is definitely something worth of notice because we have the high important data releases. Reserve Bank of New Zealand interest rate decision in line with the expectations, hike from 2.25 to 2.50, and that's done. And during the US session, we got crude oil inventories scheduled for release at 4:30, and then at 8 o'clock, as usual, FOMC meeting minutes are scheduled for release. That's about the high importance data release that might cause bigger than usual volatility. So, without any further ado, let's switch to the charts and we start with euro dollar. The 4-hour time frame chart of the euro dollar is not affected by the data released yesterday and 2 days ago. As you can see, we're still trading inside of this quite tight range between local high at 1.1473 and the local low at 1.1362. The bounce from the lowest level and the extreme low is located at 1.1325, is right now 1.31%, and the momentum is falling a little bit lower towards the level of 50, bouncing around this level. So we are waiting for the breakout to the upside or breakout to the downside. However, the situation here is that this range trading might last a little bit, and then if you take a look at the higher time frame, you can see that we have the downtrend on the euro dollar right now. So after the consolidation or the sideways market is done, the trend continuation is expected. British pound, as you can see, failed to break above the key supply zone. 1.3391 is the level, and 1.3399 is the highest level here, 1.34 even. We pulled back a little bit lower because of the extremely overbought conditions. Right now the market is trying to move back up again. Local low at 1.3327 might act as the technical support, so any breakout below this level here will be considered bearish in the short term. Any breakout to the upside means that we will be targeting levels like 1.3457, 1.3482, 1.3484, and eventually 1.3508. US dollar versus the Japanese yen is not moving up just yet. The local technical resistance at 162.44 is now being tested. Nevertheless, the situation here is not that clear anymore. We know that the bulls are buying the dips here roughly around 160.50 because those are very long lower shadows, which means these levels are being about back up. Nevertheless, there is still no swing high above 162.86, but the overall situation here looks very good for bulls, especially if you take a look at the larger time frame. You can clearly see there is some sort of the uptrend from the beginning of the May 2026. So please keep an eye on the current situation. US dollar versus the Japanese yen might be breaking higher quite soon. Gold market doesn't do much. On the 4-hour time frame chart, we broke towards 4,201, but then the pullback started, and right now neither bulls nor bears are in charge of this market, to be honest. Both of these sides of the market doesn't know what to do anymore. This might be more, this is correct trend line here for this market. So we are far away above this trend line right now, 6.55% up from the wave Y low, and we're just testing the level of 50. Maybe there will be some breakout lower in the momentum and in the price if we move towards the level of $4,023. Weakness in the background on gold. S&P 500 volatility is low, maybe because we are waiting for the FOMC meeting minutes for today. Local high 7,551, and then we are back down towards this very famous zone here between 7,488, 7,517. This used to be very strong supply zone, then it was a demand zone, then supply zone, and so on and so on. Nevertheless, there is other thing I would like to point out. There is a level here which might be very helpful to determine the current situation. This is the level of 50 on the 4-hour time frame chart RSI indicator, and this level is being tested right now. Maybe some kind of a bounce will happen. If it will, then obviously S&P 500 should go up. But if we lose yesterday's level of 7,477, next target is 7,424, and the market will enter lower zone here and extend the drop towards the extremely oversold conditions. Crude oil keeps moving higher towards the extremely overbought conditions on the 4-hour time frame chart. Right now 72.5, so we are back up a little bit as expected, and we should see the test of 73.57 before any meaningful reversal will take place. We almost fall into this very nice blue zone. You remember that this zone is the zone that we follow on a daily or weekly time frame chart. It's better visible on a daily. However, there you go. This was the low volatility zone. That was the geopolitical event, and then we got the movement to the downside. So if we fall back inside of the zone, this is all as planned. This swing high here is 67.81, so maybe I will just place my level here, 70. Yes, maybe something like this. So you can see now clearly that we hit this zone here to the 10 pip. We hit this zone, and now we have a first bounce higher. So that's the situation with the crude oil. How about the Bitcoin? So the Bitcoin doesn't actually want to move higher. We got a breakout above the trend line, very nice movement to the upside. Then we have a situation when we test and dipped below the trend line and then bounced right back up. But right now the Bitcoin is losing ground yet again, and we are approaching the level of 60,916. If we get there, then we are back below this trend line, and this is all fake out. This is all fake breakout, which is even worse for the bulls and better for the bears. Why? Because it means that bulls are not strong enough to move, to sustain this movement to the upside, to sustain the breakout above this trend line. So we should see again lower levels, and if we break below this 57,000 mark, then the outlook is even more bearish. So in that situation, please keep an eye on the Bitcoin. We might see some kind of a consolidation. We might see some kind of a sideways market. It doesn't mean we will just drop like a stone lower. I mean, doesn't mean from the technical point of view. For now, there is a still battle for the trend line. There is still a little bit of the hope for the bulls that they will recover from the level of 45 and they will jump back up. But to know this, we need to take a look at this chart yet again in a few hours and draw your own conclusions to see what is going on here. This is very susceptible area. This is very important area between 61 and 58,000 dollars. So that's why it won't be that easy for the bears to break below and then just push the price lower. Bulls will fight. How that will eventually turned out, we'll see sooner or later. For now, that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.